Hello and welcome to Compliance Briefs on Underground Banking and Daigou. In this compliance brief, we will explore the topics of underground banking and Daigou. We will outline the importance of addressing these topics, define underground banking, particularly in the context of Chinese underground banking, and explain the concept of Daigou. The brief will also highlight key red flags to be alert to, discuss supervisory expectations, and provide additional resources issued by other authorities and other recognized bodies. This compliance brief aims to support professionals, especially accountants, auditors, and administrative service providers, in understanding and mitigating the growing risks associated with Chinese underground banking networks and Daigou operations. These activities can appear legitimate but are often abused for money laundering and used for circumventing regulatory controls. Staying informed is crucial for effective AML compliance. Underground banking refers to unregulated informal value transfer systems used to send money across borders. Examples of such systems include Hawala, Hundi, and Fei Qian. While some users rely on these networks for convenience or cultural familiarity, they are also commonly exploited by criminal networks to move money anonymously. Their lack of formal oversight and documentation makes them highly attractive for laundering proceeds of crime, tax evasion, and terrorist financing. China imposes strict capital controls, restricting citizens from transferring more than $50,000 per year abroad. To bypass this, many turn to informal value transfer systems, IVTS. These networks mirror transactions by matching funds across borders rather than transferring them physically through formal banking channels, or may break up a transaction into smaller transactions at or below the $50,000 limit, often via family members, which are then recombined in an account outside China. Risks include using student mule accounts, smurfing deposits to avoid detection, and mingling illicit and legitimate funds, creating serious AML concerns. Daigou, a practice meaning a buying on behalf, started as a way to help family or friends in China obtain foreign goods. However, many operators have expanded into high-volume resale of luxury goods to bypass taxes and import restrictions and have moved to online marketplaces such as Taobao to expand their activities, although concerns of counterfeit products persist. These schemes often blend legitimate commerce with illicit finance, posing substantial AML risks when proceeds are repatriated using underground banking methods. Firms should be alert to key red flags that may indicate possible money laundering through underground banking or Daigou mechanisms. Such warning signs include efforts to avoid reporting thresholds through structuring, unexplained third-party payments, clients operating shell companies with unclear business activity, multiple payments made to high-value goods retailers or brands, or weak supportive documents or documents translated unofficially by the client in support of funds transferred which may appear false, fictitious, or contradictory. Firms should take a proactive and risk-sensitive approach, particularly in relation to clients with links to China, and take specific steps to ensure they are not inadvertently facilitating illicit activity. First, firms should identify Chinese clients that fit risk-related profiles. This includes clients who are dealing in high-value luxury goods, such as jewelry and clothing items. These sectors are particularly vulnerable to trade-based money laundering techniques and the misuse of Daigou practices. Secondly, it is essential to verify if the client owns property in Cyprus. The acquisition of property by foreign nationals, particularly those from jurisdictions with capital restrictions like China, demands heightened scrutiny. If a property has been acquired, firms must go beyond surface-level documentation. They must fully understand and corroborate the client's source of wealth and source of funds. Importantly, where required, professionals should seek evidence that the client has obtained Chinese government authorization for moving funds abroad. The absence of such evidence can be a red flag indicating use of underground banking channels. Firms should also closely monitor transactions for signs of layering, smurfing, or inconsistency with the client's stated profile. Any suspicion should be promptly reported to MOCAs, in line with legal obligations. Lastly, firms must ensure they are fully compliant with national AML law and ICPAC's directive and reporting requirements. This includes maintaining comprehensive records, applying enhanced due diligence measures where applicable, and ensuring all staff are trained to recognize the risks associated with Chinese underground banking and Daigou activity. Underground banking and Daigou activities pose significant challenges for financial professionals. By remaining vigilant, implementing robust controls, and staying informed about emerging risks, firms can protect themselves from legal and reputational harm while also supporting global efforts to combat financial crime. For further insights, refer to additional resources published by the Law Society of the UK and the UK's National Crime Agency. Links are provided on the slide. I hope you found this useful. For any queries you may contact us at compliance@icpac.org.cy. Thank you and goodbye.